welcome back to another episode of the Hizzy Hustle. I am your host here, Tyler Heisman, licensed realtor here in the Okanagan. We have been doing some crazy coverage over the last few days, but we're getting back kind of into our avenue as things kind of cool off, hopefully over the next few days. So, kind of tying in once again to the trend that we have been on recently with just, economy, housing, how we see this year working out, how we see affordability, sales pick up, prices increasing, interest rates coming down. What's our field of vision for 2025 and how can you best navigate that one? So, earlier last week, we covered the press conference of the CREA 2025 market forecast. So now we're just going to kind of take a little bit of a deeper dive into some of the stuff with the senior economist, Sean Cathcart. Super knowledgeable guy. He knows what he's talking about and definitely has some good insight to this stuff. So without ado, let's get into it here. I just got a few clips here from this podcast that I want to show that we can discuss. So,
who knows what's going to happen, as you mentioned, 1 or 2 weeks from now. So we typically, as is sort of a practice around forecasting world, forecast for the current year out to the end of that and then the next one. But the main focus is always what's going to happen this year, because that's where you have the best current information about the trends, exactly where we are. And like you mentioned, where we are is so important, right? What's a starting point for this? Are we starting at a decade low? And so even if you got a big increase, you're still not doing that great. Are we starting at a record high and ticking down a little bit? Ooh, it's a decline, but it's still a really strong year. That's all context that goes into this, and that's important to know as well.
Well, and the other thing to take into consideration is if prices go down, the people that suffer are the ones that bought recently. If we look at it as a 5-year period, because we're essentially at the COVID inflation time now in our 5-year period. So if you're buying after COVID or during COVID, then this is not a good thing. For everybody else, it could be a good thing.
So take me through. How are we doing? What's the forecast?
We're starting off from that's a tough question.
Exactly.
Let me start at the Canada level. And I'm not going to, we're going to have to get into some regional stuff because there's vast differences right now, as there always is. Mm-hmm. Although this is a bit of an Uno reverse card.
Well, and especially from Ontario to BC. For Ontario and BC are the kind of your poster child for high housing costs. So, everything in between is on a little bit of a different story.
Hard compared to history, but I'll start with the Canada numbers. We are starting off on the sales side low because we've been in an inflation crisis and interest rates. Prices went up a lot during COVID and they were expensive. Mm-hmm. And then interest rates went up and those were expensive and people couldn't afford to buy to borrow enough money to buy homes. A lot of people couldn't. And so the market has been very quiet. I called it market in hibernation. And so our forecast is that we think that's about to wake up probably this spring, but we're already seeing evidence of that in some parts of the country. So on the sales side, good increase, but still a couple years away from just getting back on track with what normal would be. Mm-hmm. And on the price side, we're going to see some gains there too, because we still have a supply crisis in this country.
Yeah, and the problem being as markets like ours in the Okanagan and particularly Vancouver, well, we're starting to see more of a pickup, but as those markets started to cool, Toronto, Ontario, in general, Mississauga, those kind of outer ring, communities or whatever from these massive cities, they had a huge uptick along that corresponded with the market increases in those areas. So, now that they're cooling off, the reason why they're cooling off, especially when it comes to buyers, is because the people that are selling are moving away. And they're moving to markets like Alberta, Saskatchewan, where they know that they can get into a house for a cheaper price. But then that's now causing the inverse to happen, where these cooling markets from the outside pushing everybody into the middle. Now people are going to start getting priced out of those areas, and then they're going to be moving elsewhere as well. So we could potentially see our market pick up because now people feel like they might be able to get back into the market, right? So yeah, a few things. Sorry, I had a terrible sleep last night. My dog has been doing this thing more recently now where he seems to just wake up and just mash his gums together. So all I hear in the middle of the night is just, yeah, it's fantastic, but it's been keeping me up. So forgive me if I seem a little tired. Based off of the forecasting, let's see what he has to say about rates getting to that low.
I think this is why I think our forecast is conservative. Because what have people been waiting for? They've been waiting for lower rates. Well, they've got those. We're not quite to the bottom yet. I think they're waiting for the bottom to know that now is the time to lock in. And they're waiting for, like we saw in September, a big burst in fresh new listings. So, you're going to the website every day. You're saying, this is the year. We're ready to go. It's February. It's the January. It's February. It's March. And you're looking, and there's not a lot going on yet because it's the winter. And then all of a sudden you hit the first week of April and boom, the website blows up with all of these great new homes to go after. I think that after years of record population growth and all these people waiting on the sidelines and looking for these particular things that are all going to happen all at the same time, that's why I think our forecast is conservative. I think we could see actually a real explosion of activity this spring.
Wow. And what are the ages of people that are going to be jumping back into this market if they've been holding off on the side? Because something that I've been hearing a lot about is that for young people, it's near impossible to even get into the market right now, both in America and in Canada. So how is that going to affect the younger consumer out there?
Right. Well, that's a tricky question. If you think about the number of first-time buyers that are out there, a lot of them can and will get into the market. So, but a lot of them, to your point, will not still be able to. Like affordability, and especially in places like British Columbia and Ontario, where housing's expensive, there will be people that just feel priced out. As some surveys have said, they feel that forever. And some of them are moving around the country because of that. But even if a fraction of that demand that's on the sidelines comes off all at once, that's still going to look like a really big increase, just not as big as it otherwise would have been if housing wasn't still pretty unaffordable. So I guess that's how I'd answer that. In terms of ages, I would guess early to mid 30s for first-time buyers who otherwise would have bought a few years ago and then rates went up. And so there's a bit of delay in that typical first-time home buyer purchase. And then also potentially people closer to my age in their mid 40s to 50s who may have wanted to be move-up buyers, but even taking on that extra, whatever it is, $200,000 in mortgage debt to get that extra bedroom would have tripled your mortgage payment in the last 2 years. So there's those move-up buyers too, which is good because you need those guys to free up the starter home for the first-time buyer to buy. So as long as we can get some movement happening there, lower rates lubricates the housing market always.
Good. So, and that seems to be happening. Inflation is down, obviously. We're coming out of, it feels like we are coming out of that, tight COVID time. And so what are the risks then when we talk about, you can look at your crystal ball and you can say, this is probably where this is going. However, these are the potential risks that may completely flip it.
And that's kind of the point that I always like to make as well, is that once again, it's not that people don't want to buy homes and that they're not willing to buy homes. The problem is, and it's not that they're not willing to spend the more money either. A lot of people understand at this point now what world we live in and that it's not going to change, but they want to know that they're not making the wrong decision at the wrong time. So they need consumer confidence. It is the most important thing when it comes to getting people to feel confidence again in the house market. If buyers continue to feel like there is volatility in the market, they will continue to stay on the fence. It's just the way it is. They want to know that they can lock into a good rate and then potentially see an increase in their investment over the years, right? Because, you know, on average, the Canadians are spending $15,000 in property transfer tax, you know, and that's, I believe that's on a $100,000 house or $800,000 house. So, you know, the national average being 750, you can expect people to be paying around, you know, you add lawyer fees, you add mortgage fees and all these type of stuff in on top of that stuff. Well, there's no mortgage fees; those are worked into your mortgage, but you know, we still tell people to kind of estimate between 3 to 5% on top of your or 3 to 5% of your purchase price on top for closing costs, right? So you need to have money in order to even make these purchases. So the problem isn't, you know, a lot of people can come up with 25 grand for a down payment, but they can't come up with 25 grand for a down payment along with another $10,000 for fees, right? There's just, you're nickel and diming people to death. And in my personal opinion, property transfer tax is one of the things that's hindering people the most, because you have to stay or have to assume that you're going to see an appreciation within the following few years. Otherwise, if you just stay stagnant, and especially the people that bought during the COVID times, if it stays stagnant enough, like, you know, you're out 40 grand if you move two times or whatever, right? In this COVID, post-COVID market, just because we've been seeing the rising in price or rising in inventory and less activity or whatever. So, you know, prices have kind of dipped or they've stayed the same. And if you sell for the same price that you bought, then it's just costing you money. So,
But upside down, or, you know, what are those risks?
Well, the one I mentioned on the high side is that if you get, if the market just goes on a tear again, like it did during COVID because of all that pent up demand, that it's going to very quickly overwhelm already limited supply. And you'll have price growth that is really headline grabbing again, that offsets all of the affordability gains that lower interest rates offer. So that's the high side risk. It's just not a good situation. It's just that where the data would be higher. And then on the downside, obviously, the big one right now looming is a trade war with the United States that everyone's trying to put numbers on, but you can't put numbers on that. It's there's so many moving pieces to that one, right? There's, you know, if those tariffs come in the way that they've been suggested they might, but then there's the Canadian retaliation, and then there's what the Canadian dollar does, which offsets a bunch of the tariffs, and then there's what the central bank does if they lower rates even more. Historically, sometimes you get into bad economic times in Canada, and the central bank lowers rates, and the housing market does really great despite everything else not doing so well. And then people are like, oh, housing's holding up the economy. But it just makes, like, to your point, it just, if you're not fearful of losing your job, say in a recession, then if rates go down another 1.5%, 2%, that is what's going to allow a lot of those first-time buyers to get in. So there's a lot of moving parts there, but ultimately it's bad.
Yeah.
Yeah, 100%. Yeah, they pretty much just touched on kind of everything that I was already going on. Let's move up here to, you know, there's a lot of kind of bulk of stuff. I would fully recommend anybody out there to actually go and listen to this full podcast, the real-time podcast. I can't remember what the host's name was or whatever. It's not in the title. But yeah, Sean Cathcart, he is awesome. He has some great insight on all the stuff going on. And yeah, I would fully recommend actually watching this full podcast because there is a lot of good information in here. I'm just picking up the stuff that I think is most relevant.
Crisis?
I think so. I mean, it's only been called that for a few years, and I certainly didn't coin the term, but it seems to be that way that we, you know, I heard somebody say it really eloquently. You know, if you go back to the 1950s, you know, you could have a family of 6 on one income that could afford a detached bungalow in Midtown Toronto. So, I don't think that it's ever gotten more affordable. I think that just with the amount that prices went up during COVID and the amount that interest rates went up right after, we crossed a line where it went from less affordable to not affordable.
Yeah.
And that.
And the one thing that people need to take into consideration as well is if you just look at history, unfortunately, things will never get cheaper. There might be situations that present an opportunity to buy something at a cheaper price, like the market crash in 2008, or like the flow of inventory in an area, right? Like some things will temporarily lower prices, but as a whole, there's no possible way that things will go down in price, because if we're not building enough to sustain the population growth and people keep on making more money, our dollar keeps getting worse, and we trade on a world currency that is far superior than ours, you're just going to expect to see your dollar be more saturated. It doesn't get to buy you as much. Things are more expensive. You need to make more money to essentially get by in the same situation. So we kind of have ourselves almost like a. It's inflation, but it's not like inflation on your goods and services going up. It's just inflationary income, right? It's just you make more money, sure, but you have to spend just as much as you make, if not more. So.
That's a difference in not in degree, which we've had for decades, but in kind. And it's so that's where the crisis piece comes from. Do we need to build a lot more homes faster? Yes. There's different numbers out there. They're all really, really, really big. And I think the crisis part, but also if you look at what we've been building over the last 20 years, we stopped building those big detached homes. We still build some of them, but not nearly as many as 20 years ago. And they're even bigger because obviously they're going to the people with a lot of money, who are able to afford that, 15 to 20% of new builds that are detached. But what we did was we talked a great game about the missing middle, townhomes and semi-detached and threeplexes and fourplexes. And we shot right through and built all high-rise condos initially. And then in the last 10 years, tons of purpose-built rental apartments. So I think it's that missing middle that's still missing. So if I'm a young person looking to raise a family, I can't afford one of these big single detached homes that sits on this big piece of ground that could probably house 3 families, but only houses 1 unit. And I also can't go to the apartment side of things, whether rental or condo, because we haven't really been building these 1970 style big condos or things like they have in, well, all over the world. But
yeah, like you're talking about your studio apartments, your 1.5 bedroom type of things, or 1 bedroom and a den plus a bathroom. You know what I mean? Like they're terrible types of building that they're doing, and they were purposely built for rentals and Airbnbs and income producing properties or whatever. They were all investments. So all this stuff that we've been doing with our housing market was to the tune of investment and to maximize profits and whatnot. And when you do that type of a thing in a market that directly affects people's ability to live and be in a home and kind of provide for themselves, you create this massive issue, because corporations will always go where the money is, and if people can't keep up with that demand, then they'll just get priced out. And then now we're at the point where we have all this stuff built because it seemed lucrative for investors, but now it can't be moved because of current legislation and all this stuff that they did to try to curb that inflationary adversary, I would call it, just in the housing space. So yeah, the missing middle, that has got to be one of the biggest issues, I think, when it comes to our housing crisis, because, there's no half duplexes with yards. There's no, there's a few threeplexes and fourplexes and stuff like that going up in my city, especially post legislation change, where zoning in, I believe it was all of BC, got changed, where any single family or resident lot can be a multi-family dwelling, so up to a 4-plex or 6-plex or something like that. So definitely something to look into there. But once again, I don't think that solves the problem, because you might be tackling the density issue, sure, but you're not tackling the issue of these move-up homes, right? Like the condo to the townhouse to the duplex to the home, or whatever that process would be, right? Like these homes are just becoming more and more non-existent and becoming farther and farther out of reach for people.
you can think of Brooklyn if you live in Brooklyn, you're not going to have a detached home. You're going to have one of those, brick walk-ups, but the apartment has 3 bedrooms in it, right? You raised a family in one of those things. In some of the stuff that we're missing, which is good. The first thing is the missing middle. I mean, like the fact that we call it that, the word missing is right in the name. So there's a lot of scope to do the thing that we all agreed for the last decade and more we should be doing and haven't done at all, which is larger apartments.
Yep.
So like a 3-bedroom type apartment, whether that's in the rental market or
and to
in
the
the
point,
ownership.
that's just
The other thing
point
is
that I
is
just
that
made, right?
what's really interesting is that a lot of these technologies actually lend themselves really well to building the exact kind of housing that we need. So a modular units that are basically completely complete. You crane them into space to stack up a 3-plex, and you can put it on site. You can have it up in 2 weeks. Or mass timber to build a mid-rise building. So I think that's a bit of a match made in heaven there, I think. So we're but at this point, it's really about getting that into the conversation.
Like we're
Yeah, and to his point there, modular housing is definitely one of the things that will probably help us get through this. When I used to be an electrician, did it for 10 years, and I did a lot of it in this environment and in this community. So I can tell you right now, when it gets cold, people don't work as fast, and especially when they're not getting paid well. So, I've always said morale is probably the most important thing when it comes to your crew and your company and your employees and stuff like that. So, a lot of construction workers' morale is that, why the heck am I busting my ass so hard to build these houses that I'll never be able to afford, right? So, having these modular buildings that maybe require, we don't want there to be less tradesmen. We don't want there to be less skilled workers. We don't want there to be any of the stuff. But if everything is getting so expensive where people can't afford to have these people come in and build the stuff for them, then creating a alternative where you can buy a house that can be put together, certified, and not professional. It has to qualify, obviously, all of the safety checks, the legislation checks, trades. God, my brain is just not working right now. Not qualifications, but requirements or whatever. You get what I'm trying to say. You take away that issue, things become cheaper. Building time drastically decreases because you don't have to go through and get each individual thing inspected. And did you know that most of the time when tradespeople call for inspectors, they don't even show up? You just have to call for an inspection. You have 48 hours after call for an inspection for an inspector to show up. And if they don't show up, you can just board it up and continue onwards. So the fact that that's even a thing is crazy, in my opinion. There's not nearly enough people to check all the work, and then it doesn't even get checked. So how do you kind of deal with that? Well, if now everything's built in a manufacturing facility and has rigorous QA/QC checkpoints, then now everything's getting built to the same extent or to the same level, and you're able to check it before it even goes out. So now you know that anything that's being built is good to go, and it just needs to be installed to a certain requirement or whatever, right? A certain specification. So there's definitely good avenues here to chase, and I think the modular home building is going to be very much the next way to go. Get the foundation poured and just stack away. It's like Jenga. Make it work. So, anyways, that's it for today. Oh, forgot to mention the last few days I actually haven't been doing this, well, over the weekend at least. But if you're curious at all, we got 80 listings over the last 24 hours, 1 back on the market, 22 price decreases, 26 sold, 20 canceled, and 4 expired. So a little bit of stuff happening here. Yeah, that's pretty much it for today's update. Thanks for tuning in to the Hizzy Hustle, and I'll catch you on the next one. Take care.